All right. Another one of my strategies that I'm not really running on the main portfolio, but I am running in a Roth portfolio. I actually don't know why I'm doing that. Maybe I should move some more of my speculative plays into my Roth since it is tax deferred. But another strategy I made a little short about it is the SPY call roll.
2 years you did how much?
1250%.
Sounds too good to be true. Can you describe that strategy?
So on the SPY, which is the S&P 500, you buy the call 30 days to expiration,
Okay.
and when it's open, and these are trading days, when it's open 20 trading days, you roll that. So you would close that out and buy the next one 30 days out, and then continuously
So
do that. You would take profits at 50%.
Take profits at 50, or if you don't hit 50%, then you roll it. How far out are you placing these strike prices?
So 50 delta is at the money,
Buy an at-the-money call, hold it for 20 trading days, roll it, or sell it at 50% gain.
and that is using the market drift because of how money flows into the marketplace. The bias in the marketplace is that it's going to go higher, so you get that natural drift.
What do you call this trading strategy?
A call roll.
Call roll. S&P 500 call roll.
Apparently, it does really well in like super bullish markets, and as you can see, SPY has been doing pretty damn well in these markets. I recently opened this literally on Friday. These SPY 670 calls, I literally opened these on Friday, and after that dip, and let me just pull up a thing of SPY right here. As you can see, SPY has been moving consistently upwards, so maybe I can capture around 2 to 3% move on SPY with options that's gonna be leveraged around 30 to 40%, which is huge gains. That's 2 to 3 years worth of this like the old man buy your SPY shares type of gains. Like if you just manage to write even a little bit of the gains is just impressive. Once again, I'm thinking SPY might end up end of year maybe 7,700 or so. That's just highly speculative. It's already up 17% this year, and all the analysts are, oh, it's gonna be, well, after 2024, SPY is only be returning 10% per year or some shit. But it's already up 16%. Maybe that's like devaluation of the dollar is up 100% in the last 5 years, and it's up a whopping 400 some percent in the max time since what 2000. All right, so going lower market cap, higher risk, or just finding smaller companies with more room to grow, and then the SPY call roll or the QQQ call roll, where I try to capture as much of the market movement upwards as possible. All right, so a new strategy, as you can tell from my new positions, is taking on more risk. I know the market is super high right now, everything is hot, and that's why I'm moving away from the big caps a little bit because their gains are limited. Nvidia was moving at 500-600% a year a few years ago, but now it's like $4.5 trillion company. So from 4.5 trillion, it moves to 10 trillion. That's only like 100% gains. I'm trying to find companies that are smaller so that they have like higher potential for gains. So that's why I'm down from like the 100+ companies, like market cap wise, like who are already like 200 billion and like dollar companies. I'm trying to move more like down to like a market cap Q who only has like I think $20 billion cap, but then his revenue is also only 20 million. So I'm moving towards more like a speculative portfolio, just a little bit. I want to see like how hot this market runs, but they can all come like crashing down on my face because these companies, their PE are really high. But when market is hot, you gotta eat. You gotta join the hotness.